It is time. The rates are finally down below 6. We're getting close to 5.5. That's our target rate. Good thing for most of us. We'll get into that, as well as fire hazard map, talking about fire season, something to be aware of. So if you're buying a house, make sure you don't buy a house in the fire zone. Or if you are, understand what issues you might face. Rates are coming down. Fed chair even talks about it. Talked about it in August 3rd. We're going to go into that and then see what you get for $2 million and $1 million in Santa Clara County, as well as the 12 months Bay Area County inventory report. Let's get moving here. First, let's check this out. Look at that. All these orange, yellow, and red areas just around the Bay Area. That's really bad. Seems, except for these little setted areas right here. But yeah, Oakland Hills, San Mateo Hills, Los Gatos, Saratoga Hills, even in Morgan Hill. We're looking at a house for a client right here, and this house landed right inside this yellow zone somewhere. $4,900 a year for fire, just for the structure. So the rule of thumb I'm showing people is if you're anywhere near this, it's going to cost you 3 times, 4 times more than it would if you were inside the gray area. Just be aware. This is about where I live right here. Imagine that. So I live in suburbia here, but any houses up here, you're paying a whole lot more. If you're on the ridge right here, you got yourself a $10 million house, but you're paying for it. Thinking about selling your house, make sure you get everything done before you put it on the market, because that way you can maximize the value of your house. This home inspection checklist walks through every nook and cranny of your house and allows you to figure out if you want to fix it or not and adjust your price accordingly. Download it. It's free. Rates are below 5.76. 30-year VA, 30-year FHA, and 15-year fix are down below 6%. We needed to get it down to 5.5. These are unquoted rates, teaser rates. If you put a point down, you're at 5.5. Even here, you do 2 points, 30-year jumbo, you can get close to 5.5, maybe 5.9, 5.75. I don't know. You have to, depends on your criteria. Let's see. Yep, there you go. U.S. existing month supply closed July, just got it, 4 months. This is a 2-month trailing. FedEx. Fed chair says time has come. It is time to lower the rates. And this is very biased, this article. I suggest you watch it with open eyes and understand that it's very biased. There's a lot of poking and prodding at one candidate and saying they don't really have control, but the reality is they have control over the Fed, because the Fed is mixed into the politics, and the government needs to keep the economy moving. If the economy stops, then everybody gets screwed, including him, Mr. Powell here. Yes, there's a twitch, there's an acknowledgement there, but the fact is the inflation has come down. We're still hurt by it, because now we're paying twice as much for bread and gas and food and house, whatever. The inflation has already been hurt. So now that they have it in control, everything is better. So just keep it at that. Dow Jones, I saw some reports yesterday that we saw a little mini hiccup. Yeah, nothing's really going to hurt. This happened last week. There's nothing really bad going on. All right, let's take a look at this one. Why is your house? I didn't think it is Huckleberry. What in the world? These are the Palmio ones. That's why. Built in 1998, 4-bedroom, 3-bath. Just listed. Let's do a smart thing and not put the front of the house as the first picture. How goes my mind? I sold one of these, same model, about 4 or 5 years ago for 1.6. Now they're worth $2 million. So after 5 years, you're only increasing your equity by 500,000. And let's see, on market 22 days. Probably going to sit there, mostly because there's 2 houses. But that's what you get for $2 million. And if you look, there's not a whole lot to choose from. Now this is just a $50,000 difference between $2 million. So that's why you see this, or maybe 100,000. But look at this one right here. This is in West San Jose. I sold a house like this right down the street from us. Same floor plan. That's what you get for $2 million. And then let's see what you get for $1 million. Not a whole lot to pick from. List price decreased. This right by Valley Fair, really close to the freeway. Burbank. This is the Burbank area. These houses are older, but it's a nicer area. They're trying to gentrify it. If you look at what's going on here in San Carlos, it's really nice because they're really spending a lot of money cleaning up San Carlos right here. These homes are adding value. So $1 million for a house with no garage. That's the same thing in Pacific Grove. This one, at least it looks flipped. Looks like they put in new everything. My opinion on this is mine and not proven. just seeing the houses and the value of the houses. If you fix up a house today, especially since we're at the ridge of a recession, I don't think it's worth putting a ton of money into fixing it up. Either enjoy what you do, like a remodel of a kitchen or new windows or new air conditioner. Do it before you ever think about selling it, because I don't think you're going to get the value out of it right now. 2 years ago, 3 years ago, it was a totally different market. Right now, we're seeing the market hedge and edge. I don't think we're going to see, if I say spend $50,000 on a new kitchen or $60,000, $75,000 on a new kitchen, I don't think you're going to get that money back. You will with air conditioning. We can go through each house based on your location and recent sales, make a better decision. I don't think buying a house and fixing and flipping it is a good thing right now. August numbers are in. So these numbers are always very fluid, and I don't understand why. It's the MLS. Not exactly accurate, but I thought I'd throw these numbers at you anyway. If you look here, Napa kind of edging up towards a buyer's market. So if you're thinking about getting a good deal, look at Napa. I've been telling people this for the last 6-7 months. Napa, there's not enough houses, there's not enough demand, and the prices are contracting right now. So what you're seeing is houses sit on market a lot longer in Napa versus Santa Clara, where we're at 1.3 months, right? San Jose, I think it's 1.7. We're so far away from it being a balanced market versus a seller's market and buyer's market. If you're asking me, active number of homes for Santa Clara County, single family homes need to be about 2,000. That's this line right here. We're at about 1,000. Months of inventory, you need to be about 6 months. That's the definition of it to make it a buyer's. We're so far away from that, it's not even funny. There's just not enough supply to meet demand in Santa Clara County. And I'm showing you these numbers. I know there's a lot of squiggly here, but you look at Santa Clara, this is the Santa Clara city's single family residence right here. Why can't I get it? I can't. There, we're at 7.7 months of inventory. San Jose is 1.1 months. We have 400 homes for sale. We need to be about 1,000 to make that a balanced market. So our inventory right now in Santa Clara County, I don't think we're going to see an issue with major contraction in the valley in Santa Clara County if and when this recession happens. In the North Valley, the North Bay might happen, but I don't see that there's enough inventory right now. The fact that the rates are coming down might loosen up a whole lot more people to get them to be able to move. That doesn't really help with the inventory. If they move from, say, Cupertino to Campbell or Campbell to Los Altos or wherever, that's not going to help with the inventory. What we need is people to move out of the area, empty nest, or build new houses in order for this inventory problem to go away. Those are the numbers. Nothing's really changed here since last week. So Measure E is still an issue for San Jose. My thoughts are, if Measure E wasn't around, we would have a whole lot more homes in San Jose that sold for 10, 20, $30 million. But we're not seeing that. We're not seeing the investment that's happening versus what you're seeing in Palo Alto, Cupertino, and Saratoga. You don't see people buying big swaths of land. Everything over here in Palo Alto, Sunnyvale, Saratoga, they're all expanding past $2 million freely. Measure E cuts us at the ankles, and it prevents our values from expanding further than what it would in other cities